Hello, and thank you for joining me, Fiona Cincotta, Senior Market Analyst at City Index, as we take a quick look at what's been driving the markets today. And before we roll in for the weekend, a look at what we'll be watching for Monday. So first of all, the performance of the markets today. European indices closed lower again. They're on track for the worst monthly performance since September 2022. Earnings were very much in focus again. We had NatWest results come in, Q3 results, which missed forecast. Now, NatWest closed 11% lower. They were trading down around 18% at one point, and the worst daily performance since the Brexit vote in 2016. Now, operating profit came in at 1.3 billion, so slightly below the 1.4 billion forecast. But also net interest margins came in lower at 2.94%. Full year net interest margin was also reduced to just above 3%, down from 3.13%. So basically suggesting that the benefits from higher interest rates are starting to wear off. As far as the US stock market's concerned, we had relatively upbeat performance with the S&P and the Nasdaq pushing higher. US core PCE, so the Federal Reserve's preferred gauge for inflation, came in and it showed a cooling in line with expectations to 3.7%, down from 3.8%. Interestingly, consumer spending, personal spending, was also up quite strongly at 0.7%, suggesting that Americans are still spending strongly, as they did across the the third quarter as well. And we saw the data yesterday. The figures that we've seen today are not likely to change expectations. In fact, they haven't changed expectations for the Federal Reserve interest rate decision next week, where the Fed is expected to leave rates on hold at 5.25 to 5.5%. Keeping the mood buoyant today was AMZN. Stock trades around just over 6% higher at the time of recording, and that's after some upbeat numbers from the e-commerce giants. They beat on forecast and revenue. Revenue growth was up 13% to 143.1 billion, and that was up from forecasts of 141.56 billion. So it was good to have some strong data from big tech, because we have had disappointing numbers as far as Alphabet and Meta were concerned earlier this week, which sent tech stocks into a bit of a tailspin earlier in the week. Now, just having a look here at the Nasdaq, as I said, we saw that sell-off in tech stocks reflected in the Nasdaq. Did find support there on the 200 SMA, just around that 14,000 level. Now that's going to key support. If we do see, sellers will be looking to break below that support in order to open the door to around the 3,250 mark. If that does hold, if we see a successful defense of that level by buyers, then buyers will be looking to rise above the 14,500 level. That was the September lows and the early October lows. Move above there could negate that near-term sell-off in the Nasdaq. Now, looking ahead to Mondays, we've still got some results coming through. We've got HSBC will be reporting. It will be a very much focus on net interest income, as it has been on a lot of the banks, as they benefited from higher interest rates across the globe. Also, what will be interesting to see is their exposure to Chinese real estate. We saw Standard Chartered earlier this week fell over 12% after revealing a $1 billion hit from their exposure to Chinese real estate. So, will HSBC be coming in with something similar? The other thing to mention is their investment banking may be under pressure as well. We've seen that investment banking has improved in some cases in some banks, but is still much weaker than it has been previously. Also on the data front, German inflation, which is expected to cool to 4% from 4.5%, and German GDP data for Q3, which is expected to show a contraction of 0.3% after the economy stalled in the second quarter. Now, that isn't really surprising data. PMIs have pointed to a contraction in the German economy. Also, the data comes after this week's ECB meeting, where the European Central Bank raised concerns over the growth outlook for the region. Now, if we just have a look at how the DAX has been performing here, we can see that it's been trending lower really since mid-July. We've seen it, trade below the 200 SMA. It's currently been testing support at around the 14,625 level. That was this week's low, more or less. And also, if we do get a breakthrough this level, then we'll be bringing the 14,450 mark into focus, which was the March low. On the upside, buyers are going to be looking for a rise above the 15,000 round number, which was also the a high that we saw earlier in October. A rise above there again will sort of negate that near-term downward trend that we've been seeing. But still, there's a lot of work for the DAX to do before we're looking towards any real higher highs or any break above the 200 SMA. That is all from me today. I hope you've enjoyed this. Please take a moment to read our risk warning, and also I would like to wish you a great weekend. And also, don't forget, if you like what you've heard, please subscribe. Thank you. Goodbye.